Welcome back to Introduction to Business. You're taking me in this series. Today we're going to be talking the role of the accountant and accounting, just general information about accounting. I think the next series will get into more into financing and into the banking system. Okay, so you're taking me online class, you're taking me to face-to-face class, or your instructor provided you with this link, or you happen to follow upon this YouTube on your own. So this recording is a summarization of everything that we talked in the classroom, through our discussions, through our forums, through the reading of the from the publisher, from the utilization of the publisher's interactive software, through the writing components that you submitted to me. Now, accounting, for those of you who are taking my course at a community college, so if you're let's see, taking my course, you'll be doing a business plan or feasibility study. Part of that plan, you're going to have to come up with an income statement. And this is what we're going to be working on today. Just understand how the income statement is a tool or a recording mechanism of my revenues and my expenses going out for any business. And here I think the author uses Google income statement and Google balance sheet. And we're just going to go over these generally. To get the full effect of understanding accounting, you'll have to sign up for Accounting 101 and 102, whatever it is at your community college that you're taking accounting. And you'll find out there's a lot more. Accounting is not that difficult nowadays, since more small businesses are utilizing the software like QuickBooks that later on could integrate into Peachtree as your business grows. And then most business owners should be aware of how to utilize or be utilizing Excel. QuickBooks and all the accounting softwares are their base, for lack of better words, is an Excel spreadsheets. You can put in the numbers, and it does a lot of the calculations for you. Those of you who down the road will take me for finance, you'll be utilizing Excel spreadsheets and a financial calculator. So, that's just a quick nutshell. So let's get into what accounting is. Okay, so you already open up the mind maps. You have access to my mind maps. If you don't have the mind map, write it out by hand. That's all a mind map is the more senses you could utilize, the better probability that you will retain that information when you need it for my exams, when you need it for work, or when you have to do something understanding accounting. What you'll find out that accounting is the language of business. It's dealing with money. Those of you who have taken me, we utilize a Blackboard course management system. You notice for every task you do in my classroom, you have a grade and a point value, or your currency, your academic currency. In business, I have to know where my revenues are coming from. I have to know where my expenses are going out. I have to know how much return on my profitability, how much my marketing, how much sales should I have to give me that break-even point that we've talked about earlier in pricing. Also give me improve my cash flow, so I could pay not only my fixed costs that you're going to learn here, but also my variable costs. There's a lot you're going to learn here. We're going to find out the difference between, well, bookkeeping, for lack of better words, is basically journals and ledgers, and QuickBook, a lot of the software does that for you from your point of purchase, POP, point of your register, electronic register. You put in, you make this, first of all, you scan it, so it's already taking that information. It's already deleting the one item out of your inventory. You're running inventory, your perpetual inventory, for lack of better words. Trying to throw in some of the accounting terms that you'll be exposed to in accounting. It's going to bring that information in, update it. It will also put it in the right ledgers and journals as a sale. Now you take the money, all electronically. This is all done. The systems are there. It doesn't cost you that much. You can even lease the system. Takes that information and now we'll put into QuickBooks or and everything else for your accounting documents that you need for your income statement and your balance. At the same time, if you have, most systems do, when we talked about last time IT, you will have now that information will be sent to the supplier. Say, hey, I'm one short. Please get ready to reorder when we hit this amount of, when I sell so much, that's going to be going to my safety stock. I have a 2 day a delivery window within the logistics system that we talked about, and then everything works. And you see how electronics and everything else is working for me, so I can spend more time selling my product, talking to my customer relation management, looking at my business, looking at opportunities, instead of worrying about where did every little piece go. Okay, so I'm going to make this a little bit larger. Remember, try to write down. You already had the lecture. You already read the books. You're looking at your own concept maps that you've already been utilizing when you're reading the book before you read this before I explain this chapter. I'm going to make this view. Let's see. I think I made it like 200. Remember, it's easier for you to see. Okay, so let's look at accounting. Some of you are only listening to this video, so I'll try to walk through it. You give my examples. Some of you are viewing it. Remember, the more senses you utilize, the higher probability that you'll be able to retain this when you need this. Hopefully, not only for the exams, but down in the future when you open up your own business or you're managing your own department and you're working your way up through the corporate ladder. You have to understand the finance part. I need a new employee. How much is it going to cost me? How much will he or she generate in sales or productivity, which will offset either me outsourcing or help my process faster so I could get my finances or my accounts receivable into my coffers. Okay, accounting. You know, so I got dollars, I'm trying to use that instead of arrows. It's a comprehensive system for collecting, analyzing, and communicating. Let me just do this. Remember, we're live when you do my recordings. We're live, so I'm not too worried. Here we go. Insert. For some reason, not working. There we go. Okay. All right. All right. So for a comprehensive system of collecting, analyzing, and communicating financial information. So basically, you're recording, and then, you know, like I said, QuickBooks. Those of you who are going to be working for small businesses, um, even though I know at the community colleges they have the accounting classes, and most of them will either have it as a credit or as a self-learning. But if you could learn QuickBooks, how to move within it, you have a higher probability, especially if you're in accounting. If you're not in accounting, uh, you have another tool, another value. You're a product. Say, hey, I also know how to enter data into QuickBooks. I know how to create some of the formulas in QuickBooks, how to set up QuickBooks for your client. Boom. I'm going to hire you for the same cost, but now you have a little more value. So I will hire you over someone else who doesn't know QuickBooks. Most businesses, that's what they basically operate. Just easy systems to gives you the basic accounting that you're learning now. Okay, so remember, accounting is the language of business. You need to understand it. Can hire out to do it, but you know, a lot of people will hire out accountants because it's like a lot of times when I do a major paper or a presentation to a client, you would have an editor look at it. He or she's not changing the verbiage, but they're looking at it. Okay, so same thing with accountant. But don't tell your accountant I don't know accounting, because they'll have that grin on their face and they'll take advantage of you. You have to understand where your money's going. Your bloodline. Where is the money coming? Like what you eat. If I'm not feeling good, what did I eat? Where's my revenue coming in? Input and my output. Hopefully, I'm getting a higher return. Okay, so importance, costs, control, higher profits. You know, cash flow. You know, you can't raise their rates because your competitors' rates are there, and the customers are looking at it. So the only thing I have to work at is on the expense side, which we'll talk about later about managerial accounting, and we'll discuss the difference between managerial accounting and financial accounting. Okay, now accounting information systems, AIS, AIS. You know, I'm not much into acronyms, but that's the acronym the author is using. So I will provide information through the eyes of the authors that I'm utilizing or you're reading as your baseline. I mean, okay, now accounting, one thing with accounting, you have to understand, a lot of people think accounting is difficult. Accounting is not very difficult. It's very easy. The problem it is accounting is very rigid. I have to put it in exactly the same way, because when I'm looking at one company and looking at their ratios or their accounting practices, they have to be the same, so I could compare business with business, so know what's going on. And that's why a lot of people now finance is a little different. I've got this information, the rigid information that gives me my report, analyzes, classifies areas that I should be concerned with, and now finance will say, what will I do within my processes to process to change that outcome, to give me a better ratio, give me a higher return on my investment, to cut on my expenses. What do I have to do? That's a managerial function of accounting. It ties in kind of with look, finance, for me to be a financial major, I have to have all the accounting classes. Okay, and we'll talk about a little bit later when we go into finance. Okay, so we have that. So it's measuring, recording, retaining financial information for use in accounting statements. Remember, last time we talked about all the raw data. Now we have to utilize this data. Now it's bookkeeping. Bookkeeping is just, bookkeepers, for lack of better words, I look at QuickBooks as a bookkeeper. You're just person entering that. That's entry level. Most people now, you're being replaced by software. No problem. You still need the next level, the accounting portion, where you had to use my analytical thinking. How do I find things? Just by numbers. I have to be able to see these numbers just don't make sense. I have to know which numbers come into my coming in and what numbers do I expect coming out. So something in those, I have to understand how those numbers are collected. Is there an error or anything else? Did I set something else? Remember, garbage in, garbage out. Okay, so you have two things. You have a journal, is each day's transaction, buying and selling, using supplies, paying your taxes, or your daily expenses, and it could be part of your variable cost. Post them into the record book or computer programs, and usually it's all computer programs. You can't start a business without using technology. Excuse me. Even a poor kid that's out there selling, for lack of better words, lemonade nowadays, he has to have a score D thing on his or her iPhone, so because most people don't carry cash, so they could use a debit card for the $1.25. I'm just kidding, but no, you can't get by without technology. I don't even want to hear it. Technology is a way of business. People go online, they go on the web, they find you through technology, they try you through apps. If you open up a business and you're shy in technology, start getting some kind of a resources on it, especially in accounting. You have to know where that money's going. And let the systems work for you. Okay, now a ledger is basically taking all the specialized accounting book or all information is placed in one. Remember, I get my journal every day, and I go to the ledger, various journals, and then various categories. Okay, different expenses, different payouts. Okay, or different revenue sources. Remember, when you're looking at QuickBooks, that's what's so nice when you have different functionalities. Right now, most of you've got one checking account. A lot of times, I'll tell people, hey, if you got school, open up another checking account. Just have school, so this way it's easier to manage. And look at that as another journal. Yeah, I mean, you got your dailies, and you put it into one journal or one account, for lack of better words, is your school checking account or savings account. When money comes in, goes out, it's easier to manage. And in business, we will call that with different functionality, function numbers, so or invoice numbers, so I know where everything's going, what I'm spending, and where if I have to cut costs, where I cut them, in which areas I'm doing very well, which that I should improve or increase in that activity. And I won't know it till it tells me how much it's going to cost me. Okay, trial balance is figures. Let me just make this a little bigger. A figure balance is summary of all information in accounting ledger. So you make sure does your balance my revenues and my expenses. I should have it should be balanced. When we look at trial balance, when we go into the components of the trial balance with owner's equity and assets and liability. What you'll see is that how did you know I got it wrong? Because trial balance means that this side of the equation, the right side and left side, that number at the bottom should be the same. So if you got it wrong, you made an error in one of the sides. Okay, double entry is a thing in accounting. Remember, I'm just giving you a quick summarization. We talked about this in class. I can move on along. I don't want to go longer than an hour in here. But I think you really need it because some people, my stories is what really ties in the pieces after you read it. If it's the first time you're reading it, you're not going to get the full effect. Read the book, listen to the lectures, the discussion, and now this is a summarization with your note. Oh yeah, now I remember this. Yes, I got this. I forgot this. Stop the video. Write it in. Look it in the book. That's how you're going to learn, especially if this is going to be your major discipline. Like when I look at people, if you did poorly in biology, that's accounting, just numbers, or you didn't do something and that's not your major, sure, okay, fine, I didn't do so well in biology, but you should be doing good in business. You should do in marketing management if you're going for a business administration certificate. That's what I'm looking for. I want to be a business owner. I want to be a nurse. I better know biology, or a doctor, or whatever. Okay, record all transactions to two places so they can check one list of transactions against the other for accuracy, like a save in a different file. Okay, financial. Okay, minute now. Okay, who uses accounting? Good question. Outside parties, business managers use it to develop goals and plans. For future. I got to know how much money I have, how much I anticipated coming in. Employees and unions, they definitely use it to plan and receive for compensation for benefit. I don't have any money to give you extra vacation. Look at all this profitability today. Cut some of that profit, bring it back into here. Or, yes, I see you're barely surviving. How could we help you? We won't ask for a raise now, but we'll get it next time when your profitability is going up. Excuse me. A lot of companies have, like, Jewel and Esco has a 401 or profit sharing. You don't share any profit, you don't make any profit. This keeps employees motivated, keeps the theft down, and makes sure the customers are happy. Because if the business is making a profit, then I get a share of that profit. Okay. Investors and creditors used to estimate returns to stockholders, determine the growth prospects, and decide whether the firm is a good credit risk. Okay? Tax authorities, like it or not in business, they don't care if you ever collect the taxes at the year end. Hey, I owe taxes, you got to pay for it. How much tax inflow? How much do I put away from my retained earnings that's part of my taxes? So I know how to plan when I do my budgetary portion of this section here in accounting. Determine the tax liabilities of individuals and businesses. Remember, I'm also collecting for my employees, so for the government. I'm a tax agent. All businesses are tax agent, and ensure correct amounts are paid in time. Remember, I'm opening this up and I add on to it for those who just listen to me through MP. Government regulatory agencies rely on to fulfill their duties. Remember, that's where they know. That's why it makes it easier electronically. Even now with my taxes, I can't say I don't remember what my how much I made, because all that is sent directly to the government. And once I put in my social security number, all these different things, if working properly, ties in. And they say, here's how much you made. You don't need to send me a W-2 form or anything else. We already know. Or if you forgot something and they did pay you out, they'll come back and say, Dr. George, you must have forgot this other stream of income that you did not claim on your income taxes, but it came with your social security number. And technology, you gotta use it, you gotta love it. It helps you with your taxes, it helps you with your inventory, but it also helps other people. Okay, let me see. Hang on here. Let me just bounce it. Who are accountants and what do they do? You have a controller, person who manages all of the firm's activities, okay, or what they call chief accounting officer. You have a certified public accountant, CPA. We're going to talk a little bit more on here. Remember, I'm just trying to follow along with the book, so when you're reading and taking notes, I'm going the same way the author is going that you're reading. Okay? Accountant licensed by the state in offering services to the public. So I know this person actually knows accounting principles. You know, it's because he's a CPA. You could understand accounting principles just through a college or associate in accounting, but you're not a certified. You don't have that certification. So you know how to drive a car, but you're not licensed in the state to drive the car for other people publicly. That kind of makes sense? Or from a company, a lot of company, and it's just a testing you take that you understand all the principles. Not an easy test, but they tell me. Okay, managerial accounting. Now remember, we're going to talk about auditing and everything else and part of the accounting, but managerial accounting is the section that looks at the expense sides, looks at my inventory. I can't raise my costs up here. I want to have a higher profitability, and the expenses, my process are good. Then I look at my inventory. Could I get the similar inventory with the same quality? What could I reduce? Maybe I could pick it up to delivery. Maybe I find a distributor that ships for free. That's a cost saving. All that are my processes. I've seen if I'm a manufacturer and even customer service. Well, how do I respond to the customers? How do I respond to follow-ups? Do I do it manually or I do it electronically? Do I buy a new system? But anytime I'm doing improving the system, I have to show a break-even point. I have to show a return on the investment, and now I'm making more money that increases my profitability. Involved with, okay, provide information, analyze, okay, managers inside the organization to assist them in decision making, okay, preparation and control of budgets, costs of production, cost of marketing, minimizing tax liabilities. Okay, now we go into financial accounting. Financial accounting looks so managerial accounting. That information is shared within the managers, within the internal users, customers, unions, whatever. Financial accounting is now my face. It's my W two when I'm going for a job interview. It's my if I'm trying to go for a loan. It's how many customers I'm buying. How many customers do I have? What's my stream of income? Or my W two, my salary. So the financial is the what my face is to the outside world. What I'm reporting to the outside. I'm analyzing what outside users. What's my annual report? So again, so we're going to talk about finance accounting, responsible for acquiring funds and managing funds under capitalization, insufficient startups. So, let me just tie these two. Look at accounting as my scale. I step on the scale. This is how much I weigh. Body fat, all that. Truck number. I may not like the numbers, but these are the actual numbers. This is it. The dietitian is my chief financial officer or controller. He or she is looking at this scale and say, okay, you got to lose some weight or you got to put on some weight. You need more revenue. So they understand all of what goes into those reports, the different variables, the different aspects, and they'll change something in the processes or talk to their engineering or just different logistics or different supply management. Here's where we got to reduce our supply costs or whatever, or we have too much inventory, we're not turning around our inventory quick enough. Whatever they're going to do, they're going to make some kind of recommendations that gets implemented. Then accounting is going to go back on that scale and is going to look at that and say, yes, now I understand. Okay? Okay, so financial analysis generated for people primarily outside the organization, so set up in a format that's like all annual reports are very similar. Outside users are people, all that are interested, people interested in the organization. Let me go in here. How much debt do they owe? Is the organization profitable? Hey, why would I invest in it? That's what I'm looking for. Okay, now the annual report is a yearly summary statement of a financial condition, progress and expectation in the form. So if I'm looking at expanding my business, so I'm not going to pay out as much of my dividends next year. I don't want the shareholders to get nervous that I'm mismanaging. I'm letting them know in advance that I'm going to have a larger percentage of retained earnings from my sales or from my profitability, from my profits. I'm going to shift that, and I'm going to do it for another market or another product, another venture for the next year, and hopefully this will increase my return on investment or my profitability or one of my ratios that other investors are looking at that makes me more marketable, not only for my product but for stockholders to buy into the company so the organization grows. Here's the annual report. I think I had a picture of the annual report. What do I have here? Oh, annual report. I just throw this in here. Management's discussion and analyzing of the operation. It's a balance sheet minus income and cash flow. Now, here's an auditor's opinions. Unqualified, nothing's wrong. Qualified, one or two irregularities. Customers could or cannot change. Adverse, serious, did not follow general accounting procedures that we're going to talk about. Disclaimer, CPA unwilling to make an opinion. It means, hey, I don't want to get involved in all this. So you know that company is very questionable on their accounting practices, and I would not invest into that organization through the recommendations of the annual report. Okay, now CPA, Certified Public Accountant. Okay, when we talk about public and private accountants, let me just close this up. Private and public. Private accountants are accountants who work for one organization. A lot of organizations may have a smaller staff of accounting than you would assume. Large organization like Motorola, you figure, hey man, they only got 20 accountants. Such a big company. They get into their international. How do they do that? They may have a small staff of accounting, but they utilize public accountants. So if I need someone in taxes, I understand the tax law, but I will outsource to a tax accountant basically specializes in that. I'm just keeping an eye on him or her. Make sure you're not ripping off the organization. So now I go into a private accountant, is salaried accountant hired by a business to carry out its day-to-day financial activities. They work in a single firm, government agencies, nonprofit, you know what I mean? They do a lot of things. So this private accountant, he or she has their hands into a lot of accounting. You know, there may be a private accountant plus also finance. Smaller companies will have more hats. And also could be marketing. They may have 3 or 4 hats. Could be CPA. Could be just going to college and understanding account, but someone is taking care of them. Okay, managerial accounting, private accountants provide financial services to support managers in various business activities within the firm. We already discussed that. Certified management accounting. Now this one, you know, professional designated award by, yeah, made a mistake there. Sorry, by the Institute of Management Accountants. In recognition, management, accounting, and qualification. It's just another certification saying, yes, not only do you have a college degree, you're also certified by this agency that you have the skill sets to look at the expense sides and the managerial, and you have a process, a template that you go through to make sure that you're saving them money. Okay? All right, and here's just a picture of a CPA, certified public accountant. I'm showing that a lot, so understand that's you know, you have your associate, your bachelor's in accounting, but you also need that as CPA. Now you have everything all tied in. Some people got their associate or their bachelor's and have a difficulty passing the CPA, and the reason is it's a very complex exam. I think now it's more automated, so it's all on the computer, so it may be a little easier for individuals. Okay? Passes here, it could be both in private and public. Okay, CPA Services, you know, the Certified Public Accounting Services. They review and evaluate information, okay, used to prepare companies' financial statements. They're also doing audits. You have to some of them certified to do an audit. Systematic examination of a company's accounting systems to determine whether the financial reports reliability represents the operation. That's for end run down the road. If you take an account into a little more detail, that what I put in are actual numbers, because I'm making decisions on this, not only from the investors but also internal within the company. I have to know what's going on. You have to know what's going on in your checkbook. If other people go in the checkbook, hey, I'm buying more stuff, but they spend all my money. What happened? Everyone has to know what the other person is doing in business. That's what accounting provides. The audit is making sure that I'm doing everything. If you haven't ever had an IRS audit, they look at all your paperwork in detail, supposedly. Nowadays, the computers that basically run through it, so you want to make sure that everything you're doing is up. If they have a question about, because the computer says, hey, these numbers don't seem right, then you have a physical or an individual actually goes in there and looks at it, and that's what the auditor does. The numbers just don't make sense. Doesn't follow regular accounting practices. What's he doing, or what are they doing to try to avoid the taxes or trying to mislead the investors? So you have an independent audit, evaluation, and unbiased opinion from an outside. Most of your auditors has to be outside. You can't be the only person inside the organization. I did the audit. I think that was the problem with Wells Fargo. Some of their audits were internal, not external, and some of it. About accuracy of the company's financial statement. Certified internal audits. Another organization is certified, and you have an actual auditor who knows the rules, knows the processes, knows what he or she should be looking for, who have a bachelor's degree, 2 years of experience in internal auditing, and pass an exam administered by the Institute of Internal Auditors. Now we're going to talk about the General Accepted Accounting Practices, or GAAP, not the store GAAP. There's one more A. Just kind of throw that in. Oh, GAAP. Yeah, I remember. I don't know, GAAP. So it's Generally Accepted Accounting Principles, guidelines that governs the content and what you find, how you set up the categories. And so if you're looking for a small business, if I'm a plumber, try to find an accountant who's doing more plumbers. Not that any, electrician, electrical account, what do you call it, for lack of a better, accountant could also help you out. But a plumber accountant. He already knows the rules and everything else for that industry. He's got this QuickBooks, everything set up for the activities that a plumber will need. So you already know he knows more. Look, if I got trouble with a DUI, I don't want a divorce lawyer representing me. If I'm going for a divorce, yeah. If I'm going for a DUI or any kind of criminal activity, I want that person who specializes in that. That's all it's telling you. Okay. Okay. So you have tax services, assists provided by CPAs for tax preparation and tax planning. Some are very specialized in just in that certain category, that industry. Management advisory services, assists and provided by CPA firms, certified public accounting firms to public out to everybody else. You contract them out in areas such as finance planning, information system design. That's like, what do you mean information? That's IT. You're maybe an IT guy, but I also have an accounting background. I may be an engineer, electrical engineer, but I also have a managerial accounting because I know I have to understand the process to see where I could cut, and now I can see what's the outcome that the savings going to be. And then I got to talk to my tax accountant to see this right course of action to minimize my tax requirements to the government. I want to pay the government, but I don't want to give them what they deserve. I want to keep more for myself legally. Okay. Core competencies for accounting, and a combination of skills, technology, knowledge that will be necessary for future CPA. And all this one here is, I've got a chart up here. It just tells you what you need. Remember, I'll leave the chart up for those who, sorry, for those who, you stop it, freeze it, read it. We already discussed this in class. Okay? Now, the next one is forensic accounting. Now, forensic accounting, if there's something, a lot of times the government may utilize a different type of individual, like a Sherlock Holmes. He or she is, look at it this way. If I look at an English paper, I write my paper will be writing for me my business plan. I may not pick up some of the grammar errors. I'm not an English major. You usually have an editor to help me clean those up. But an English teacher, he or she will pick that up like that. It's like blaring at him. Same thing with a forensic accountant. He or she are looking for certain areas that they say, this is not right. I know I should start looking here. What's the numbers? It's just not flowing in rightly, because that's what they see day in and day out. They can just identify it quickly. Just their job, their expertise. So practice of accounting for legal purposes. Certified fraud examiners. They're not looking to try to be unbiased, but they're trying to find out where did somebody make a mistake, or where did somebody do or is trying to hide something from us. Associated certified fraud examiner, recognition qualification, a specialty area with forensic accounting. Do you see? So if I want to go in accounting, there's so many different areas. Which area is more profitable? Now, auditors and everything is not it's not as much money. That's why managerial accounting is more, because you save the money and then you get a percentage of the savings plus a flat fee. I think most accounting firms, managerial accounting consultants, that's usually how they get paid. I'll save you. I give a baseline. Boom. I'll save you 10%. I get 1% of the savings plus I get a fee in case I don't. I just break even or don't. A very smaller saving. So you have two incentives. One is the first fee. The second is my motivated to get a higher percentage of return of savings because I get a bigger payout. Okay, federal restrictions of CPA services and financial reporting. And this one they call SOX or SARBOX. Okay, just look it up. Is SOX or there's a Sarbanes-Oxley Act of 2000. And what does that tell me? It's an enactment of federal regulations to restore public trust in accounting practices by imposing new requirements of financial activities in public trading corporation. It basically says a lot of times when the corporations were doing something wrong, the chief officers, not the financial officers, the presidents and vice presidents said, I didn't know, I left to the accountant. I didn't know he was ripping off the things. I was just making a good return on my investment. So when a CEO, chief officer, I didn't really handle the day-to-day operation, he or she can no longer. They are responsible for that activity within the organization. They could be held liable. They could say face prison terms, so they have to sign off. Like I have to sign off on my W-2 form, my taxes, even though HNR block or some other excuse me, a taxing service did the work. I have to say I agree with the information that he or she did it underneath my direction. Okay, so select the provisions, and this basically accounting oversight board requires auditors retain audit work for so many years, requires CEO or CFO to certify company financial records, prohibits corporation for extending personal loans, I'm just thinking of there's a big issue in the last presidential debate, and we'll be talking about is there going to be more activity with the Clinton Foundation? Forget about Mrs. Clinton, just the foundation as itself. Because of people in power are really using that power and not following the rules. Bottom line, that's where accountants is going to come in. Forensic accountant. They're just not going to say they're not taking any bias. If you follow the rules, no problem. If you did something that did not follow the rules, that's when you have questionable, especially since it was brought up. Remember, somebody's got to take action. Otherwise, I'm going to say, why should I follow the rules? Should I get away with it? Unless I got. Look, when you look at people who have wealth, not that we should be jealous because they got a lot of other stresses, everything else. But when you have wealth, you have to know where that wealth's at. You have to know how that wealth doesn't get rusty, how they're making money on money. Otherwise, it's just sitting under a mattress. People who have wealth understand the accounting principles, they understand the rules, but they could also afford people to manage that wealth. And if something is questionable, they also could afford people to defend those course of action. You and I, we have to know the rules, no different than they do, and so to just to not get into that situation. But if you understand that I'm doing this legally by the rules, you have a good chance of even beating IRS as an individual. You need to know the rules. They're accountant. Just as I said, you can't use this for your personal use. This wasn't a personal use. This was for a business use. This was for a what do you call it? To get the vote out use or whatever. But you have to be able to justify why you utilize that money in this way. Legally, what does the rules say? That's why, remember, accounting is not hard. You know the rules, but it's very rigid. In finances, trying to find that same thing like in marketing, find that right on the fence, so I could utilize the rules to maximum benefit, hopefully for myself and my suppliers, my employees, my stakeholders, or the government. Okay, so let's go into the balance sheet. There's three main statements in any accounting. So if when I look in, when a consultant comes into your business, they look at three main statements. They look at your balance sheet. That basically tells me my assets, my liability, what's my owner's equity or my worth, okay, as an individual. Okay, and then you have an income statement. That's the revenues or my salary or my sales coming in, and I have cash flows, my checking account. How much money do I have available to run the day-to-day operations and pay my bills or something that comes up? I have a lot of individuals who have a lot of stuff, a lot of money, but they don't have a dime in their wallet that they can buy a coffee if they wanted to. That is poor because if something happens, you have to have some cash flow to take care of some things that could just come up, or something to pay for something, or just to maintain your operation. You have to have a certain cash flow available. You're looking for a month or whatever, your accounts receivable may be monthly, but they may not pay on time, or you may get other streams of income. So you have to, just like you even get your paycheck, you have to be able to manage your cash. So after I pay all the bills, if something comes up, I can still buy a cup of coffee or buy my inventory. So let's talk about the balance sheet. The author did a nice job in the balance sheet. Look at the examples. In my class, you'll have to do a income statement for their an accounting. You have to know all of these statements. So a balance sheet is what a company owes and owes on a specific date listed the assets in order liquidity with the most liquid asset first. And cash is the most liquid. Everything you're trying to get into is how quickly I can turn it over to cash. Accounts receivable, IOUs are the next ones. And then you start going into your business, your inventory. Sure, you could turn it into cash, but you got to sell it. So it takes a little longer. You have to find a buyer. A lot of other stuff, it's easier for me to convert. Cash is the most liquid asset. And the same thing with when they go on current is within a year. Anything long term is over a year. So when I look at my assets, is I have tangible, intangible. Tangible assets, I already know I got the building, all that. Intangible assets is what you have to look is non-physical assets. Got an error there. Let me just save this while I'm saving. Such as a patent or a trademark has economic value and form expected benefit. When you look at the SBC, Southern Bell Communication, when they purchase AT&T, they purchase it for not for their goods because it was split up, but everything else. They purchase it for their name. Their name had more value than their current company name. It was wide world. You say AT&T, you know it's communication. Anywhere in the world. That's why they purchased that name. Plus it gave them a good reputation and everything else, but that name was what they purchased. So that's like an intangible asset. Goodwill. When I, excuse me, early in the morning here, goodwill, amount paid for existing business above the value of other assets. Sometimes an organization, again, like Apple, if you look at the stock market and everything else, it's overvalued for what Apple's, for their assets, everything else they have. But they have that brand name. They have that loyalty. Do you see what I'm talking about? Intangible. All right, so let's look at. So we got intangible, tangible, like a touch. Intangibles, a lot of things about the organization that the name and the brand or whatever else is worth it. Okay, now liquidity. Ease in which assets can be converted into cash in order of liquidity. Your current asset converts in 1 year. Remember, fixed assets is long-term assets relatively permanent, such as land, buildings, or equipment, computer equipment. So remember, fixed assets long-term over a year. Intangible assets, and we talked about long-term assets, provide no physical form, but do have such value as patents, trademark, and goodwill. Okay, so I had that in here. Let me just move this one here, so it'll be like this. Okay, it'll be easier for me. All right, it's for you. Okay, so now depreciation. When I look at depreciation, you've learned about depreciation in economics. Depreciation is accounting method distributing costs of an asset over its useful life. So if I depreciate an asset, let's say the asset is worth a car, let's say $10,000. You don't get a very good car for $10,000. But you still could. It's just a Chevy truck. Okay, $10,000, just easier. And I depreciate it for 10 years. So every year, the 10,000, the car loses a value of $1,000. Economic, it's older, something happens. After the 10 year, it means that the car's the only thing is salvage value. Doesn't mean there's nothing wrong with that car. I run my car to 200,000 miles on all my trucks. When I'm ready to give them up, I give them up to the charity because they have no more life into them. I just give it here, take it for scrap. But even though I paid off that car, I can't depreciate it anymore. The car still has value. I can still run it. It's just I don't have any tax breaks on it. So the idea of depreciation is once I depreciate it, I can't write it off on taxes. Is that I will buy a new car, sell that off, and the other person who buys it whatever cost I sell it. The market will bear, okay, and they will start all over depreciating that as an asset. But now I will buy a new car and start redepreciating, so I bring money back into the economy because I get rid of my old because it's still I still have a better return by getting the write-off than keeping the asset that's still functional and it still works well for me. Hopefully, the new asset that I buy has more is more what do you call it? Environmentally safe, more productive, more efficient, whatever. Are we okay? So remember, okay. So now liabilities. Remember, I'm on my balance sheet. Again, liabilities, rent, salaries, debt or obligations that are owed. You have current liabilities, debt that must be paid within 1 year. You have accounts payable, credit, current liabilities a firm owes for merchandise or services, purchase on credit. Okay, so I owe too. I also buy things. When the business buys a credit, they don't buy it just for their own personal use. They have a line of credit. They have to buy their inventory 6 months in advance, pay for it, get it shipped before they actually start selling it. So that's an investment I have to do. Hopefully, nothing happens to my inventory. I secure it, and I need it to sell it in advance. So I have to have some kind of a line of credit. New inventory coming in, selling. We'll talk about the cost of goods sold. Okay, long term is over a year. Notes payable, again, short or long term liabilities. A business promises to pay at a certain date. Could be your credit cards or your mortgage. I'm trying to bring it in. Remember, when you look at accounting and finances, in your own personal life, that you have to pay your bills, pay your car. How do I get more money to buy a car or fix something else, whatever? It's the same thing, same transaction, same mindset that goes on within a business. We just do more research. We are more less emotional. It's basically very factual. Here's what's coming in. How do we change it? So it's very systematic. We understand the. You have to understand the whole processes of where my dollar comes in and how much do I get to keep at the end, and where can I minimize, where's the money's flowing out, and how do I slow it down so I keep more of it as profitability for myself or for my shareholders. Okay, bonds are payable. Long-term liability, the firm must pay back. Long-term IOUs, like a mortgage. Retained earnings retained by a firm for use rather than paid out the dividends. Now, retained earnings, you have to know where you're going to be going. You have to know where you want to go in the future. The future, you have to plant seeds. To plant seeds, if you're a farmer, you have to buy the seeds. I'm just doing here. Those are watching. I'm just making it easier. So retained earnings, retained from a firm. You can get rid of all this rather than pay dividends. I'm just doing it easier for you. Remember, I told you just for when you're jotting down notes. Okay, accounts payable. Accounts payable is current liability consisting of bills owed to suppliers. Now, when I look at owner's equity or my own wealth, is assets. This is the only formula you have to remember. Assets equals liabilities plus owner's equity. So I take my assets, my liabilities, and I subtract that. What's left is my owner's equity. All right? My owner's equity, I add the liabilities together. Remember, because it's my asset, I owe it. It's the car. The car's worth $10,000. That's a liability, but it's also my car. I owe 10,000. If I pay it off, I owe nothing. So remember, so assets equals liabilities plus owner's equity equals basically gives you my owner's equity. Okay, accumulated only earnings. I'm trying to use the authors. Hang on a second. Okay, I'll slow down a little bit. Accumulative earnings from the firm's profitable operations that are reinvested in the business are retained earnings. And here's a picture of Google's balance sheet. Look at it. We went through this. Here's your assets, right? 93,000 million, because it's a million. Okay, and total liability. You see how the numbers, the balance is the same? Because here's all my assets, whatever word. Here's basically my current liabilities, and then I subtract my owner's equity, and I still come up with the same amount. So really, my assets, I'm worth 93,000. Here it just tells me that it's not all mine. I still owe the bank 40, liabilities 14 billion there, because it's a million, 22 million there. Okay, are we good? All right. Sorry, I know some of you don't have this. Okay, so we have this. The next one I'm running a little bit. I'm going to speed up a little bit. Now, income statement. This is what you have to do in class for me. An income statement, for lack of better words, let me just close this off. Okay, an income statement tells me my revenues and my expenses. The financial statement that shows the firm's bottom line. Okay? That is profit after cost. So my income statement, you have monthly income statement. Did I make a profit this month? Did I lose? If I didn't make a profit, I have to increase my income or my sales, my revenue for next month to so at the year end, I'm more in my profit margins or my return on investments that I promised my investors, or my own goals that I've set up for my own business. Okay, revenues is the monetary value the firm receives for goods sold, services rendered, or other payments. Very easy. Okay, your net income or net loss or net profits, whatever you want to call it, is gross margin minus operating expenses, income tax. Look at this. Slow down. See what I'm doing. Cost of goods sold. And we went through this in class. I'm not going to go into detail. It's confusing. But remember, look at it as my example, the pantry. I come in a pantry, I brought the goods, just my pantry. So my first month, my cost of goods and cost of goods sold are the same. Next month, if I always have to have the same amount of items in the pantry, you know what I mean? Next month, some items are going to cost me more, some items are going to cost me less, and that's when I subtract that. And then at the end of the month, I know what my cost of goods sold or manufactured. Merchandise that the firm sells or cost of raw material, supplies it's used in producing items for resale. Okay? I just did a summarization. We went through this in class. Operating expenses, costs other than costs of revenues incurred in producing the goods. What did it cost? My labor. What was it? Everything in my operating. We went into the detail. Look at Google balance sheet. Look at Google's. I got Google's income statement. And then I got my gross profit is how much the firm earned by buying or making or selling the merchandise. Here's the formula, right? I'm not going to go into it, but it's profit or loss equals revenues minus expense. And then I go to a little more detail. And here's the Google. Here's my revenues. Let's see, the two bad net income, and then they got this approximately. So they're looking at projecting. They need to have a goal, but you have to look at monthly to see what's going on to see if I got to make some adjustments. Remember, accounting gives me that data. Finance takes that data and sees how they could improve the outcome. Okay, cash flow statements. Remember the three statements you have? You have your balance sheet, asset liabilities, gives you net worth, owner's equity. Then you have the other ones, we had an income statement, how much money's coming in. Now the last one is my cash flow. This is where a lot of businesses have problems with. They don't have enough cash flow when they need it. What happens? I can't pay my bills on time. Something happens, it slows down my business because I got to charge more. If I had some additional cash, I didn't have to pay that higher interest rate to get something fixed or get something modified. If I'm paying late, if I'm taking more loan, it affects my credit score. In the long run, it affects the money I need, the cost of money I need to borrow now so I can get my supplies or my new market open and running. I have to understand my cash flow. The difference between cash coming in and cash going out of a business. Cash receipts and distributions, remember, point of service. QuickBooks does that for me on a daily basis through some dashboards or on a monthly basis. I look at daily and I understand what I need a monthly, and it tells me you're on projection or you have to increase the next day's sales by such and such a percent. You don't want to work it. Look, if you go to a lot of these malls, you're in a week, you say, how do these people even stay open? Such a big store. Going to a weekend, that place is packed. And sometimes that's why they say good, Black Friday's coming up. When they say Black Friday, I want to be the black. Some businesses, Christmas or the spending time now at the end is how they make their whole year's budget, is that they have to have a good showing. Even if they discount down, this is what they're going to make it. Because then when they discount down, they get rid of old inventory for the next year. They make money on them. Maybe not the same profitability, but they have enough of it so they could sell more items at a lower cost, but have the same profit outcome at the end. Finance, accounting work together. Okay, so managing cash flow is a key consideration of a business. This can be particularly challenging for small and seasonal businesses. So you're looking at your operations, your investment, your finance, all that money. Where's it going? I have to have all that, but do I pay extra on my some expenses, or do I hold some when I get extra cash? What do I do with it? Okay, ability to pay bills on time, right? You only have it. People always got some money put aside, petty cash, for lack of better words, if you want to look at that in small businesses. And here's the Google on their cash. Remember, you can make it larger on your smartphone. Okay, so we took care of my cash flow. Now a budget. A budget, we're almost done. A budget, internal financial statement. I have to budget. How much money I got? I budget now to take care of all my, at the beginning of the month, I know I got so much bills to pay. It's already budgeted. Once I pay off, what's left is my disposable income or discretionary income that marketers are trying to get a hold of. But I know I got this, or retained earnings if I'm looking from a business. What do I do with that money? do I put it, pay off a bill if I got a high bill, if I got enough, or do I just hold it for next month? You want to hold money. You got a lot of high interest bills or interest accounts payable. Pay those off. And now I could utilize. Remember, well, I put it in a bank for 2%, but I'm paying 17% in accounts payable. Get rid of that account so you have more money, because you're just basically losing. It's just like falling through your, going through your fingers like sand. All right. So you've got the budget. Okay, so perfect pollster's budget. Here's your budget, and all you're looking at your budget is how much I budgeted. I anticipate my sales, my revenue. What's on my actual, and then you adjust your budget next year. But this way, you have a goal. I have to be in here. You don't be at the year end and find out, oh my goodness, I didn't have enough money to pay my taxes. Oh my goodness, I'm losing money. You should have made those adjustments at the year end, within the year. That's what accounting. That's why you have to understand this part of any, whether you're running a business or your own department. Okay, reporting standards and practices. Not much more. Formal recording. Okay, let me just go in here. I'll put this on here, so you're following along. For some reason, okay, there we go. Okay, so a formal recording and reporting of revenues at appropriate time. It's a guideline for financial statements, should not include just numbers, but also furnish a management's interpretation. Okay, so you got revenue recognition, formal recording. This tells me, my journals, my ledgers. Full disclosure. Not only give them the numbers. Remember, in finance, that's why even in finance or accounting, you have to do a written paper. You have to explain it in your own words. Yes, we are very profitable. Yes, we're going to have a return on an investment. Look at the numbers. I paid so and so. I diagrammed 15 or whatever, it tells you all that. Okay, so this is what I'm looking for in my annual report, and also for my updates within the managerial meetings that you'll have. Analyzing financial statements through ratios. Okay, now here are the ratios that they utilize. When I'm looking at ratios, you have to use ratios for the industry. If I have, let's say, turnover inventory, if I have a car, a dealership, I would maybe expect that about maybe 5 cars turnover a month. That's a good month for me. All right, you remember, depends if a higher end a car like Mercedes, maybe 1 or 2, depending on the geographic area you're located. But my turnover is like 2 cars a month. That's good for me, or 5 cars a month. If I have a turnover of grapes or produce 5 times a month, I've got old, stale grapes. So I'm using my turnover ratio, inventory ratio. I have to utilize the industry. Similar. Look what's the benchmark, the industry that is the high performer. That's what benchmarking against. What's their turnover? What's their activity ratio? Walmart's looking at Target's activity ratio. They're looking at Target's solvency ratio, and their profitability ratio. Okay, so let's look. Solvency ratio is financial ratio, either short-term or long-term, for estimating the borrower's ability to repay debt. That's all it's going to. I have enough money to pay off my debt. You look at the GDP, gross domestic product of the U.S. government right now. I think we're at 80%. We got 20% discretionary income. We're still making money in our productivity, which is good. We should have only 20% and have 80% to improve the economy. That is great. Okay, profitability. Earnings per share. How do I know, if I'm looking at profitability, earnings per share, return on investment, look at this. So financial ratio for measuring first potential earnings. Profitability ratio measures net profit. Company's earnings for each of the outstanding share. That's my earnings per share, okay? And we explained this in class, so I'm not going over. I'll just give you a quick summarization. Oh, yeah, now I remember. Return on equity is found in the balance sheet and income statement. The next one is activity ratios. Financial ratios for evaluating management efficiency in using the firm's assets. Effectiveness of an asset, so how effectively management is turning over inventory. Any kind of asset. This is inventory, is how many cars I got, how much equipment I have, how much vehicles are sitting in the yard every day. I want to use it once a month. That's an asset that's not making any money on me. I'm paid so much on it. Let's rent it out. Let's lease it out. Let's just sell it and lease it. You have to look at what's your assets are doing. Employees are an asset. What are the most expensive asset I had? Are they productive? All these are activities. So what's my inventory? What's my return? What's my output? My productivity? All those are activity ratios you'll be looking at analyzing, depending what you try to find. And you're looking at these compared to other industries that are similar. Otherwise, the ratios are useless, like I talked about the inventory. Okay, short-term solvency ratios, and this was a financial ratio for measuring a company's liability to pay immediate debts, and its ability to pay short-term debts. It's like what they call the asset test. I'm just using different terminologies in here. So if you're talking, remember, you're learning vocabulary in this course. There's like 500 and something new concepts in vocabulary. When you're talking to an accountant, when you're talking to a marketing, when you're talking to somebody, and you're talking about current ratio, they exactly know what you're talking about. They know you know some of those accounting principles. I'm talking about different leverages. So let's go back to the current ratio. Pay its bills on time. Divide current assets by current liabilities. That's how I get my ratios. The financial ratio for measuring a company's ability to pay off its current a financial ratio for measuring current a company's ability. Sorry, I got stuck on that one. Let me just put it back here. Okay. Okay, the next one we have is the leverage ratios. When I'm looking at leverage, think about when I'm going to buy a car. I don't have the money. I'm leveraging my for credit my I'm credit worthy, see my collateral, my character, everything else about my business similar to my personal. So it relies on borrowed funds, extended debt used to run the business. So I'm looking at how much I'm using debt to run my operation. How much am I using my credit cards to live on my lifestyle I have now? Because when I'm taking debt, I'm using future revenues or profits now to pay off for my business. Okay, so I'm looking what's that ratio. Utility companies have a real high ratio because they got to have all this capital. They can't get the investment, the money back on it. Other companies, I'm looking what's the debt to owners ratio. This information is found in the balance sheet. So remember, you got that. You have a ratio. Ratios are like dashboards. It's easier for me to see a ratio compared to another ratio. What percentages? I'm only 5% heavier than the next person. So I put it in a ratio. In that kind of a category. Okay, inventory turnover. I'm not going to talk about that. Speed of moving inventory. We're going to discuss that. Okay, how many more do we have here? Holy macro. We're almost done. Okay, long-term solvency is company's total liabilities. That's my debt. I have my leverage, ability to finance an investment through borrowed funds. Nothing wrong with that. Most of us wouldn't be able to have a house if we couldn't buy it through a mortgage or put a down payment down or a car and everything else, and we finance it over it. It's better off to have the cash pay for it now. That's what they recommend. But in reality, I need it now to make money. I'm a farmer. I plant the seeds. I can buy the seeds now, so I have something to put in the ground, and then my return. So remember, there's always that when you're utilizing debt properly to make more money on what you are spending on the debt is what you have to look at. That's finance. Accounting just gives me those numbers. So earnings per share. Okay, it's a financial ratio for measuring a firm's potential earnings. Profitability ratio measures the net profit. Company earns for each basic share of outstanding. Basic earnings for shares is return on sales. And we already talked on that. Now the IPEC Code of Professional Conduct, and this basically is professional conduct for CPAs. I mentioned highlights the code of ethical for CPA on chart. Okay, here's the code of conduct, right? For examples of unethical, illegal accounting practices. Again, I've got another one, violation. So all this one here is just my the code of conduct for the CPAs. Okay. Okay, now internal. Oh, this is the last one. We're almost done. Internationalizing accounting. The problem with accounting, you still have to know expenses, everything else. Is just that the rules or how they present information in other countries may be just slightly different. So you have to make some modification to have apples with apples. What's going on now is established in 2001. House in London is the International Accounting Standards Board, an organization responsible for developing a set of gaining implementation of those standards, global accounting standards for everybody. So now, because a lot of countries were, when you look at, we're in a flat economy. What happens in China? What happens here? I have to account. I have to, like it or not, follow the money. Where's the money going? What's my expenses? What's my depreciation? So certain aspects are similar but a little different. So what the International Accounting Standards Board is trying to find something that's international, something like the ISO, International Standards Organization, the development of international standards. They're trying to do the same thing for accounting. So if my accounting practice in the U.S. may be similar to the European Union, maybe similar to the ones in China. It's easier for me when I'm doing forensic accounting. It's easier for when countries are looking where you're making your money. Are you hiding money in Switzerland or New Zealand? I think it's a new place, or Brazil, wherever. Are you okay? So this is something going forward. And those of you going accounting, try to get more international. A lot of companies are multinational. It means you have businesses in all different areas or different countries. The more you know, the more international. My background is in international. My PhD is in international business. You have to understand it. Now, there's so many countries. Which countries are you doing more? Are you doing more with China, more with Japan, more European Union, more Mexico? Understand their principles. Okay? All right, so let me just bring this down, expand to number one. So here we are. We're finished. I think I went a little bit over. That's okay. I covered everything. We talked about accounting, remember bookkeeping, use QuickBooks. Mostly accounting is where the money's, the critical thinking. Bookkeeping is just general ledger, journals and general ledgers. Who uses accounting? Everybody. Unions, government. What do they do? We talked about controllers, chief financial officer. Remember, managerial accounting is looking more at the expense side, the supply side. Financial accounting is the face that I give out to the general public, public and private. Private, the small accounting within one company. Public are any companies. H&R Block would be considered public, because you could be any company utilizing their services, because they specialize within your organization, but they're not your own accountants. They're like outsourcers. CPA Service, Certified Public Accounting, with the services they provide, auditing, managerial, financial, forensic accounting, those that go in there if they think there's some kind of theft, to look at it to make sure there's something going on. We mentioned Clinton Foundation. I'm just looking at the something that's been in the news, and there's some accounting practices where they're legal, where maybe they're losing money. As long as they're doing everything legal, hey, that's all. That's where a forensic accountant's going to come in there, and he or she's going to look at it just a little bit different. Just like you write a paper, did you plagiarize? You got software, they'll say, yeah, somebody wrote this 5 years ago. You didn't give them the credit, and that's all the forensic accountant. It's an interesting field. It's not boring. You're going in there, you're looking, you're finding, but you have to really have a passion for numbers. You have to understand that in here. You can't use the software. You have to know which areas you have to look at. Okay, balance sheet. We talked about your assets and your liabilities. Gives you the network. We talked about income. That's your expenses and your profitability. And so it's your revenue and your expenses coming in. We talk about a budget. You have to have a budget. Am I online? Am I close to my budget? What's my and the first time when you're doing your business, it's harder to do a budget because you don't have the historical data. After your first year of business, utilize that data. Remember, you already have it to plan an accurate budget depending on the seasons and the customers and what's going on. And now you have something to base the budget. Last year I made 5,000. I sold 5,000 units, and now this year I'm only selling 4,000. I had to increase what's going on. Or last year I made 5,000. This year I'm selling 7,000. Ooh, I'm doing something good. I don't know what, but I'm doing something good. Yes, you got more advertising, you got more marketing, you got a better product. Or businesses now, people already know your name. Your brand is being established. Customers are coming back. So I expect an increase. So then now what do I project for my following year? If I got a 2% increase or 20% increase, let's be realistic. I want 40%. No, there's only so much of a market. Let's be realistic when you make your budget next year. It's nice to go over, but give you the worst case and the best case and find something in the middle for your budget that you shoot for. Always try to exceed your budget. Let's say expenses, but more sales than you expect. Okay? Reporting standards practice, analyzing financial statements for ratios instead of looking at all the numbers. Remember, you also have to do a full disclosure. Tell me in your own words where the business is going and be profitable. The numbers just justify the verbal communication or written statements I have in here. My full disclosure. I look at the ratios. The ratios are only important when I'm looking at benchmarking the best of the company into the same industries. Otherwise, I can compare apples with apples. Okay, long-term solvency, more than a year, and then again, the professional code of conduct, what's ethical, hopefully the person signs on there, but you have to understand the accounting principles, even though if you're outsourcing, to make sure your accountant's not ripping you off. The author did a nice job explaining what to look out for. And then internationalizing accounting principles is just that more companies are working outside their own home country. So let's make the accounting, it's easier to hide money in different countries because the principle's a little different. But if everyone's equal, it's a lot easier for not all businesses and governments to see the actual cost. And it's not to hide money or to rip off money. It's so if I invest in a company, I know exactly that, hey, the numbers are accurate. This is a sound business. I'm a shareholder. I'm a stockholder. I'm buying into a company. I'm merging into a company. Make sure the numbers, or I'm buying a small business, or I want to invest in that, or I'm a supplier of that business. Am I giving them a break that the business is sound and solvent and they're running properly and following all the laws and all the rules of all the different countries that they are doing business in. All right? So my name is Dr. George Mochocki. And look, accounting, and the next class is accounting and finances. A lot of students find that difficult, but work with it. My recommendation, take all your accounting classes now. Somebody will take accounting 101. Oh, it's too hard. And you wait 2 or 3 semesters, take accounting 2. Take it right now. You might not have been the best at it, but you remember it. And accounting 2 builds accounting 1. You wait too long, you forget what you already forgot from accounting 1 within the semester. But now you can just take it. Then take your finance. So do all your math. And you got all your math. You're already thinking the numbers. It's easier. Your brain's already being exercised in that, in the math portion, the accounting, the finance, the statistics, the cost accounting, the financial accounting. These are all full courses you'll be taking. I'll just give you just quick summarization. I'll see you in our next one. I think we're doing finance, if I ain't mistaken. I don't have the chart. Let's see. Managing business finances is the next one we'll be doing. All right. So I'll talk to you later. Again, my name is Dr. George Mochocki. Make sure you read the book, do the homework, ask questions in class. And if you just happen to find this YouTube on there, look up your community colleges. That's where I teach at. I teach at either College of Lake County or Harper College. Different books, but very similar course materials is covered. You get your best bang for your money. That's how I pay off my student loans. The more classes you sign up with me, the better off I can pay off my student loan obligation and debt that I owe for my return on investment, that I can share this knowledge with you. Again, my name is Dr. George Mochocki, and I'll see you in our next series. Bye.